So we're talking about raising capital in a distressed capital market environment. Why are we talking about this? Because if you know anything about raising capital to purchase assets, regardless of the asset, obviously we love commercial real estate. But if you're looking at different verticals inside of commercial real estate and you've tried to get a deal across the finish line and raise essentially the equity necessary to get the loan, to get the keys to the asset, regardless of the asset in the last couple of years, you know that it's been extremely challenging to do so, right? When the Fed started to raise interest rates historically by 12 times, starting in March of 2022, and when the insurance market started to put pressure in certain markets around the country to eliminate competition, thereby driving up insurance prices, or the cost of utilities went up, or the hedge market for floating rate debt became volatile, thereby increasing exponentially the cost of rate caps on your floating rate loans. You know that all of those objective market factors made it virtually impossible to raise capital in the traditional sense in the way that you have historically done so, right? So what have we seen? What type of tool out there that is compliant with existing security regulations that would allow you to essentially decide about whether to potentially solicit interest for somebody that might want to invest into a new deal without committing to a 506c offering? If you know the differences between a 506b offering, which is the historical rule that says no solicitation, no advertising unless you have a pre-existing substantial relationship with the person that you're in communication with, versus having to advertise and only to an accredited investor that has to be independently verified as an accredited investor, you know that that sometimes creates tension, right? If I select a 506c offering for essentially to raise money for my new deal, and I don't do the 506b offering, then I've eliminated essentially certain types of investors, friends, family, loved ones, people that know you, like you, trust you, the people that are most likely interested in investing in your deal. So what the SEC came out with, and this is under Rule 241. So we're talking about Rule 241. This was effective March 15th, 2021. For those of you who are like say, well, that's really old. In SEC land, this is not terribly an old rule, and this is something that still people don't even know about as of today. An issuer, right, under this Rule 241, an issuer, that's the entity that essentially is selling off pieces of it to potential investors, may engage in an exempt general solicitation of interest for an offering of securities. That means you may go out and actually advertise without making an offer subject to registration if you have certain qualifying factors. And this is what we call testing the waters, the testing the waters rule. So if you've heard about this, we want to know, and you want to know what are the disclaimers. Here are the 4 disclosures that you need to provide to investors if you decide that you're going to try to test the waters before you decide on whether to do a 506c or a 506b offering. So number 1, that the issuer has not selected a specific exemption from registration for the offer and the sale of securities. What does that mean? That means that you legitimately, truthfully, authentically, transparently have not decided on whether you're going to do a 506b offering or whether you're going to do a 506c offering, and you are disclosing that to the recipient of the solicitation. Number 2, no money or other consideration is being solicited nor will be accepted. So in other words, if your tombstone or what you're testing the waters material actually is well received and somebody decides to send you a check basically in connection with that, you're sending that check back. You're not accepting money or other consideration. Remember, this is testing the waters. It's basically trying to gauge whether you're going to have sufficient commitments necessary to do a 506c offering versus committing to a 506b offering that eliminates the ability to advertise. Number three, we're talking about what are the four disclosures to investors. We just talked about number one and number two. Number three is no offer to buy the securities can be accepted, nor purchase price can be received until an exemption is selected. And if applicable, the filing disclosure qualification requirements of the exemption are met. That means, again, if somebody decides to send you money and you don't have a pre-existing substantial relationship with them, you're testing the waters and they're not an accredited investor, guess what? You can't bind them to that commitment. And you're not going to be able to issue essentially equity to them until after after you have elected what exemption you intend to do, whether it's a 506B offering or a 506C offering. And number four, this is the last disclosure, that the indication of interest does not involve any obligation or commitment. Once again, you can see the public policy behind this. This is not meant to be a loophole to allow you to engage in solicitation to stranger investors without electing an exemption. This is allowing you to test the water, so to speak, to decide before you elect whether you're going to do a 506B or a 506C offer. Why might somebody do testing the waters? Well, think about it. If you're somebody that's developed a social media following or a following through other forms of general solicitation, you might think to yourself that I want to do a 506C offering. But even after you potentially test the waters, let's say you don't select the 506C yet, but you don't want to test the waters, and you find out that the vast majority of your investors are going to be non-accredited investors or investors that you have a pre-existing substantial relationship with, and you don't want to go through the enhanced independent verification of the accredited status of those investors, so then you would select a 506B offering. This allows you to do essentially both because it allows you to test the waters before you actually elect it. Hopefully this was helpful for you in your experience as you go forward. In the meantime, happy hunting.